Joining us now, Oliver Chen, TD Cowen, Senior Retail Analyst. Oliver, great to have you with us. Not much time for last-minute shoppers out there. Who seems to be doing the best so far?
We're excited about Walmart. Walmart offers great value, but also a high-end customer, too. Also, the AI story at Walmart in terms of lots of first-party data and using that for both supply chain as well as Sparky. We also like other ideas like Richemont and Cartier. And what we're seeing with the consumer is bifurcation, strength at the high end, but also pressure at the middle and low. We upgraded Ulta. Beauty is a major topic and a highly giftable item, too. And a lot of what's happening is returns to classics, meaning preppy with a twist. So overall, the consumer is stronger and better than feared. And our holiday forecast, we raised slightly to up 4 to 5.
Some might say, many will say that Walmart is expensive. Target, though, recently it's been on a 9-day winning streak, which doesn't put much of a dent in terms of the losses that is seen relative, in particular, to Walmart. But is that moat in terms of the spend that Walmart has committed to over years and making it more of an AI-forward retailer, is that too great for Target to overcome, or could there still be value here in Target? Could there be a turnaround here?
Well, Target's a work in progress, and the things that Walmart did, Target does need to do. It needs to improve the store experience, the supply chain, and as we think about Walmart, there are 3 things. It's digital advertising, it's the marketplace model, and it's AI. And that's a retail playbook which matters for all companies. Scale matters. So Target, we're watching it, work in progress, also bringing Target back, bringing joy back, and working on the merchandise and offering sharp values. So never say never, and better late than never, but we'll have to see, and there's new management there. On the other hand, Walmart is well on its way in building a marketplace and building a supply chain that integrates AI is very challenging. Another idea we like is Costco. Costco at this multiple at 40 times. We think that's a great opportunity, too. It's number 2 pick after Walmart for us.
How does a Costco fare in this sort of environment where people are being more choiceful? Yeah. And it does look like consumers are not necessarily gravitating toward large packages, large volumes of goods?
Well, what's brilliant about Costco is the iconic Kirkland brand. So customers love a great value no matter what, and they're trading into private labels, and it's a zero loyalty environment. Costco also has great chicken and great diamonds. So you're seeing Wagyu beef work in prime cuts, but you're also seeing chicken and ground beef. So you get that whole microcosm, and it has a very slim assortment and a customer who loves it, and a high level of renewal rates at 92%.
Yesterday, we had Steve Leisman on explaining the results of the All-America CNBC survey. And shoppers are basically saying that things cost more money, so they're going to spend more, but it's because things cost more. What are we seeing at the retail level in terms of the impact of tariffs still and the impact of tariffs to come? Because what stood out to me, at least in the Ulta call, was that they said that there's some products that still, they haven't passed through that tariff impact yet.
Well, analytically speaking, for sure, what we see ahead is more costs getting priced to the consumer. So far, the impact to financials and revenues has been around 1% in aggregate, and it's been
to margins.
Yes,
1%.
to revenues, and margins have been better in part because inventories have been managed more tightly, better than we expected. So the price increases currently in the marketplace on an aggregate basis have been less bad than feared. But there's a dichotomy on with the consumer. The consumer is fundamentally strong, but sentimentally weak. So keep that in mind.
Say that again.
Fundamentally
strong,
but
sentimentally weak.
Like they don't feel good.
Exactly. And it's even more pronounced at middle and low as we look at our survey. And that's true because of bifurcation. We also see customized moderation, meaning consumers trading up, consumers trading down, consumers trying to be bougie with the budget.